why the UK stock market beat the US, and why that doesn't mean you should buy it. Everyone keeps saying the same thing. The UK stock market is back. Britain is winning again. Even the US couldn't keep up. And when you look at the charts, it does look impressive. Over the last 12 months, the UK stock market has actually beaten the US. So the big question is this: has Britain suddenly become an economic superstar? Or is something else really going on? Let's talk about it. For more than a decade, the US stock market completely dominated. If you invested in the S&P 500, you probably did very well. If you invested in the UK market, not so much. America surged ahead. The UK lagged behind. But zoom in to the last year, and suddenly the picture changes. The UK catches up, then overtakes, and for a moment, it looks like the tables have turned. But before you rush to buy UK stocks, you need to understand why this happened. Because the reason might surprise you. Here's the key thing most people miss. The UK stock market is built very differently from the US market. America is dominated by technology. Big tech, AI, growth companies. The UK stock market is full of banks, energy companies, mining firms, defense contractors, and companies selling everyday essentials. In simple terms, old businesses, real-world businesses, unsexy businesses, and that difference explains almost everything. Now think about what the world has looked like since 2020. Inflation exploded. Interest rates went up fast. Energy prices surged. Wars broke out. Governments started spending heavily on defense. Ask yourself this: which companies benefit in a world like that? Not tech startups, but banks, energy companies, miners, and defense firms. Exactly the kinds of companies that dominate the UK stock market. Let's start with banks. When interest rates are low, banks struggle. But when rates rise, banks make more money. They charge more interest on loans. They earn more on deposits. So, higher rates are bad for borrowers, but great for banks. And over the last few years, rates have risen aggressively. That's why UK banks have performed so well. Next, energy and commodities. Oil, gas, gold, copper. Prices for all of these surged. Mining companies and energy firms suddenly became extremely profitable. Again, the UK market is full of them. This wasn't genius economic policy. It was positioning. Now defense. Global tensions increased. Wars broke out. Countries promised to spend more on military equipment. Defense spending didn't just rise temporarily. It became the new normal. And once again, the UK market is stacked with defense companies. So while the world became more unstable, these businesses benefited. Uncomfortable truth, but still the truth. There's one more reason the UK market jumped ahead. Concentration. The UK's main stock index has far fewer companies than the US one. That means a small number of big companies can move the entire market. If a handful of banks, miners, and defense firms perform well, the whole index rises. In the US, gains are spread across hundreds of companies. In the UK, a few winners can carry everything. That makes the UK market more volatile. It rises faster, and it can fall faster. So here's the critical question. Does this mean the UK is now a better investment than the US? Short answer: no. This performance is not a vote of confidence in Britain's economy. It's a reflection of the world we're living in right now. A world with inflation, high interest rates, energy shocks, and geopolitical tension. If those conditions change, the advantage could disappear. So what should investors actually do? First, don't chase recent winners. Buying a market just because it performed well last year is one of the easiest ways to lose money. Second, remember this. If you own a global index fund, You already own UK stocks. You already have exposure. Adding more UK exposure is an active decision. It's a bet, that's fine, as long as you understand what you're doing. A small tilt towards the UK can make sense if you want less tech exposure, or if you want more income-focused companies. But going all in because of recent performance? That's not investing. That's performance chasing. Here's the real takeaway. Markets don't reward countries. They reward the types of businesses that fit the moment. Right now, the world rewards banks, energy, defense, and commodities. Tomorrow, it might reward something completely different. The UK didn't suddenly get better. The world got more chaotic, and the UK market just happened to be built for chaos. If you found this useful, consider subscribing. This channel is about money, mindset, and long-term thinking, because in investing, the goal isn't to be right this year, it's to still be standing 20 years from now.